Hello, everyone. How are you guys doing today?
Recording in progress.
Who's recording? Dash. Okay, I prefer Devon to record, so I'm just gonna.
Recording stopped.
No, it's not Devon. Yeah, screen record on your OBS or whatever. So, in today's session, just 17 joined today. Let's wait 2 more minutes for the others to join. So, in today, we're gonna be basically doing a quick recap of 5 minutes of what we've done in the previous session. I'm going to be talking about the mistakes that I've seen in the homework, okay? And also, we're going to be doing a storyline today, multi-time frame, and talking about how you can basically identify or predict when you're going to have an explosive move of 400 or plus pips move, right? And when does price stop that move? How does it start? And all the signs for a storyline to start and end, okay? Okay, let me just see the pictures. All right. Okay, so some of the homeworks, I've seen that you guys were not marking all the levels. Like you've been playing so safe. You're afraid to draw many lines on the chart. Okay, you should go hard on it. Okay, every single fresh level you do that. Okay, that's the first mistake I've seen. Okay, some of you are playing it safe, and I hope the explanation that I've sent in the group it clarified what's a QM. Okay, so is anyone still confused about what's a QM? No, all good. Okay, amazing. So let me just see here. Yeah, this homework is well done. So for the fresh and QM homework, I didn't see a lot of mistakes, just missing some levels. Okay, you should basically go hard on it. Some of you were marking the lines like this, just doing something like this, okay? Like it's not really straight. To make it straight, just use the shift button on your computer and it's gonna be like this, okay? Just press shift, okay, look. Okay, just press the shift button. It's gonna straighten up. Also, from the second homework on the swing levels that are gonna start the big moves, I've seen that you're always focusing on the left on the daily here. Let me give you an example. So none of you in this area marked the down move that came from here. Okay, none of you marked where did this come from. Okay, because most of you were looking at a level from here and you didn't find any. Because look here, you're not gonna find any level on the left. As you can see, there is no level that price reacted from on the left. So you didn't mark any level in here. But the thing is about the swing points, they don't have to be on the left. Okay, price can do this. Okay, it's gonna go like this, find this level, and then go down, right? But what if there is no level on the left to react from? Let's say when price wasn't here, where did this move happen? Okay, because there was no level on the left. Price can create a level itself in this area. It can create a level itself in this area and then react from it. Okay, that's what happened in this scenario. It didn't find a level on the left, but it basically created one here. As you can see, this A level, it got created in this area. Okay, we reacted to it and then we started our bearish move. Okay, so that's the second common mistake that I've seen in the second homework. Besides that, everything is clear. Okay, all right. Now, for now, before we start, if you have any questions about the previous session, please go ahead and type it in the chat. Let me just see the homeworks right here. Okay, amazing. So let's get started. So for the storyline, okay, storyline, you have to understand that price as a theory, right? The movement on the higher time frame. For storyline, we're going to be using the daily and the weekly. We're going to be ignoring the monthly. The use of the monthly is only for refinements. I'm going to be explaining that later on in the session. So the storyline that you're going to be using or analyzing is on the daily and the weekly. The most important one on the daily, but the use of both of them is for the for finding explosive moves. Okay, so this theory about storyline, it says that price moves from a fresh level to another fresh level, and from that fresh level to another fresh level to another fresh level to another fresh level. Okay, so it bounces from a fresh level to another fresh level on the higher time frame from the same one. So if it's going to go from a daily, it will stop at a daily and then go to another daily, stop at another daily, go to another daily. Okay, and on that way, this is called the storyline, the bearish move. The storyline was bearish. On this bearish move, we're going to have some daily levels as well, but they're going to be broken. Now we have reasons why did this daily got broken and why this daily got respected. The reasons are very simple. Okay, so the same thing on this bullish move. We're going to break some levels, respect a level. Break some levels, respect this level. Same thing on this bullish move. Now I'm going to show you an example here. And the same for the weekly, okay? So let's take an example in here. Price, okay, reacted recently from this daily, right? Fresh gap, boom, reacted from it. Where did price go? So it's supposed to go from fresh to next fresh, okay? So this is the fresh level that we reacted from. If price want to go up, it's going to go to the next fresh level right here, or this one right here. One right here, okay? These are all fresh levels. But why did price break this one, and decided to react from the ones above? Okay, why did it give you this pullback? Okay, basically your price was consolidating. It was quite weird this week. But why did it pick these levels? As you can see, picked that one and broke this one. We have signs that we're gonna be going through today. So the first important sign for price is basically represents 5%, but you can't neglect it. Okay, you need this 5% in order for the storyline to basically start. So the other 95% of the signs cannot, you can't use them without the first sign, which is the rejection. It's very simple. What is a rejection? You're gonna have a daily fresh level, okay? A daily fresh level right here. And you're gonna be looking at the daily candle, waiting it for, leaving it with a wick. So you're gonna have a wick right here, and price closing below it. This is the first sign, which is 5%, just 5%, but you need it, okay? You can't use the other signs without the rejection. So once you have the rejection, you're gonna monitor the second sign. Okay, the second sign is basically the H4 breakout. Why did I pick the H4 breakout? So it is one time frame lower. This is the classic, okay? The classic way to know a storyline, how it starts and how it ends. There are other ways that we're gonna be talking about in the next few minutes. So here you have a daily reject daily. You go one time frame lower, which is on the H4, okay? On the H4. But if you go for the weekly, to find the weekly storyline, you're gonna be looking at weekly, reject weekly, and daily breakout. So daily, reject daily, H4, breakout. Now, price is gonna make structure approaching this daily, like this, and then you're gonna look for your breakout, but not just any breakout. There is a difference between an external and an internal breakout. You have to make a difference between these two. So the difference between an internal and external breakout is something like this, okay? Yeah. This is the internal breakout, this is the external breakout. What's this? This is basically a V level. Okay, you're gonna use line chart, or if you're basically if you got used to the candlesticks, just use the candlesticks. The last V level that got created before the touch is the external. The V level that got created after the touch is the internal. So if you just have this, let's say you have daily reject daily and an internal breakout, this does not start your storyline. Okay. This does not start your story. You need the external breakout right here. Now, price can sometimes do this, and it's still going to be internal. Let's say you have this. This can be external. I'm sorry, internal. Why can it be internal? When you have a wick right here, okay? Let's say we touched the price right here. This V level is basically created after the touch. Okay, you're not going to look at the candlesticks, only going to be looking at the wicks as well. I'm going to give you an example here, and it's going to clarify it for you. So Let's go to the left. I always take this example. Yes, the breakout requires the candle close below. So you have a fresh daily above, right here. And the rejection does not matter how long the wick is, how big it is, it doesn't matter. Just closing below it with a wick, even if it is right here, it doesn't matter. So here you have daily, reject daily, okay? Daily, reject daily, and then you go to the H4, looking for your external breakout on the line chart. So if you go to the line chart, your external breakout is right here. Why? Because basically we touched the price right here. This is the last B that got created before the touch. So we broke it. No, storyline is bearish. No. Okay, no. Because you have to use the candlesticks. When you go to the candlesticks, you're gonna see this wick. Okay. When you see this wick, you need the last V that got created before this wick to get broken, not the one after. So this one is after it, so it doesn't count. The one that counts is this one. Okay, this is the last V that got created before the touch. Now, some of my old students just got lucky. They started selling right after this break, and then they just got lucky with the sales. But sometimes that happens, but most of the time it will destroy you. Okay, internal breakouts does not work. The external breakout are the ones that work. Now, did I clarify? Is everything clear about the internal and external breakout? Any questions? Clear, all clear. Okay, amazing. So, yeah, external breakout, internal breakout. Price breaks, we start selling. After what? After few pullbacks, after instantly, it doesn't matter. Okay, I'm going to explain that in the entries session. Are there only two types of breakouts? Yeah, there are only two types of breakouts, internal and external for the storyline. Okay. Now you have different breakouts for the ECMTF. We're going to talk about in the 5th session. So let's say you have a daily reject daily, okay? Daily reject daily. And on this daily reject daily, the last H4 that got created before the touch is way too far. So you're going to have something like this. And then way too far. Okay, so this is the last V that got created on H4 before we touched. It is way too far than the daily. So you're not going to be waiting a whole 1,000 pips for it to break or 300 whatever pips to break. What you're going to do in this case, you're going to drop one time frame lower on H1. Okay, on H1. What you're going to do on H1 is look for an external breakout, but with a wick. Okay, you're going to need to break the wick. So it's going to look something like this. It's going to look something like this. And you're going to break not just the V level, but also the wick. So you're going to have the wick right here, and you have to break it. Okay, once you break it, then the storyline is 70% bearish because the strongest signs are the daily reject daily, H4 breakout. But when you have the H1 external breakout with the wick, just 70% bearish. But it can be 100% bearish when it does break it on the New York session. Okay, so not the level formed in New York. The break happens in New York session. Then the storyline is officially bearish. I'm going to try to find some examples in the chart. Let me just see right here. So let's say you have this daily, reject daily, and then on the H4, we had the break right here. Okay, we had the break right here. But let's say this V is way too low. Okay, I'm going to go to the H1 and see if there is a break on H1. Yeah, exactly. So as you can see here on H1, this is the last V level that got created before the touch, right? So you're not just gonna break it, you're gonna break the low. In this case, it got broken. Okay. Now here, after this close, the storyline is 70% bearish and 100% bearish if it closed below it on New York session. Let me just check real quick. And the break here happened on 1 hour before, is actually 30 minutes before the New York Open. So in this case, it did not break in New York, it broke close to it. So it's just 70% bearish. Okay, so 70% bearish after we closed below this, and after we closed below that H4, then the storyline is 100% bearish. Now, after you have the daily H4 breakout, where is your destination? Your destination is simply the closest daily fresh. So daily, H4, breakout. The next basically destination is going to be right here. This is the next fresh, and then this is your next fresh right below it. Okay, you're basically gonna mark the closest levels that are closest levels to the current level that we rejected. So here are some of the levels. You're not gonna go so much far away, like in the back. Okay, you're not gonna go very back there. You're just gonna look at the recent levels from the recent leg of price. So how do you basically look at basically identify the higher quality levels? The first thing that you're going to do is you're going to go to the monthly, okay, straight from the daily. You're going to skip the weekly and go to the monthly and look if any of the monthly levels align with any of these daily levels, because you're going to go to the monthly, and on the monthly, okay, we had this gap, basically this this monthly candlestick. Just ignore it, okay, because okay, let me just delete that. So we have a daily level right here that is aligned with a monthly. So you're gonna do that. Okay. You're gonna pick this one. And on the same time, you're gonna go again from daily to weekly. So daily to weekly, and look if any of the weekly levels are aligned with the daily. So in this case, as you can see here, this daily monthly is not aligning with a weekly level. And this daily is aligning with a weekly, and this weekly is also aligning with the daily. So the ones that are basically refined between two time frames are the higher quality ones. The ones that are alone, let's say just a daily level in here, no weekly, no monthly, are the lower quality ones and are basically 70% chance of them breaking. But these ones, chance of them breaking around 30-40%. Okay, so checking again the weekly. You have one right here, one right there. And you go to the daily and see how it goes. So price is going to reject one of the levels that you mark. Okay, so these ones broke, so you're gonna delete them. Once you have the daily reject daily, in this case you rejected this level, and this level. Which one you keep? You keep the extreme one, okay, the farthest one, because there is no point of leaving these. Okay, you just keep the last one right here. How do you know if price is gonna flip again? You look at the H4 breakout. So they reject daily, H4 breakout. In this case, we didn't have an H4 external breakout, nor an H1 external wick, New York or whatever breakout. So we just kept going lower and lower. Okay, so as you can see here, we rejected this daily alongside with the weekly. So this is a daily plus weekly. This is also a daily plus weekly. As you can see, price is very sharp around these areas right here, daily plus weekly. Okay, and here is again daily plus weekly. So these levels that has basically two time frames on it are more likely to give you a reaction. Now, is there any question about the refinements and picking your targets for the storyline? Very clear, amazing, amazing. So how do you basically know when are the explosive moves are going to happen? So refine daily to monthly, then to weekly. Yes. So daily to monthly is the highest priority, because daily aligning with the monthly is a very, very, very high quality level. Then if you don't find any, or just find one level, then go to the daily and the weekly. Okay, you're going to go to the daily and the weekly anyway. So go to the daily and the weekly, mark the levels that are aligning between the daily and the weekly. And these are the second most high quality levels. And for the daily alone, just mark them just in case. Okay, daily alone is more likely to break. Do you use monthly as well for storyline? No, monthly for storyline is not good, just for the refinements. That's the only use for them. Now we're going to be talking about the explosive moves and the mini storylines. So here you're going to have what? Weekly level. Okay, and your target is the next weekly, right? So you're going to have a weekly reject weekly and a daily external breakup, because it's a weekly, so one time frame lower is the daily. You know, weekly reject weekly, daily breakout. Now your destination on the weekly trend is this one, because this is your next closest fresh weekly level. Let's just pretend that there are no weekly levels in between. This is your first target. While the daily is going down, so it just does a pullback and then it goes down, it's gonna find the daily level in here. So this is the daily time frame. Okay, don't get confused in here. So this is the daily time frame. It's gonna find a daily level between this weekly to weekly. Okay, and it's gonna reject it and give you an H4 bullish breakout. So you're gonna have a daily reject daily and an H4 bullish breakout. So when you have an H4 bullish breakout or H1 external New York breakout, daily reject daily, the storyline of the daily is going to be bullish, and we're going to be going to the next daily. Say the next daily is right here. That means we're going to go there, right? So in this case, the daily storyline is bullish and the weekly storyline is still bearish. So what do you do in this case? When you have a daily against the weekly, you're always going to be following the daily, but when it is against the weekly, you're not going to be holding the trades for too long. Let's say this is the daily. The next daily is just right here. The difference between them is 200 pips or whatever. You're going to be closing all your trades on the next daily, okay? So preferably actually close them at 120 pips, because most of the time when the weekly is against the daily storyline does not get respected a lot. So right when you have another daily reject daily, so you're going to wait for something like this, daily reject daily, and an H4 external breakout above. You're going to have an H4 external breakout. So here, this is the start of a bearish daily storyline, and the weekly is already bearish. Now here is a 90% chance of having a very big aggressive sell. So boom, it will eventually go to the next weekly, but when you have the start of a daily aligning with the weekly, it's not gonna do something like this. Okay, it's not gonna be gentle. Okay, so what it's gonna do is this: break, pull back, boom. Okay, it's gonna go for that 300, 400, 500 pips in just one day or one session. Okay, so make sure that when the storyline of the daily is against the weekly, right when it changes and they align with each other, you better move right here. Okay, I'm gonna give you some examples. Yeah, the money shot Joshua. Let me just give you an example right here. So here you have a weekly reject weekly right here. Okay, don't get confused. I'm gonna be explaining today something called CC. Okay, I know this V level is unfresh. I know it is unfresh. Don't get confused. But this is a weekly reject weekly. Even this is unfresh. I'm gonna explain that right after this. Okay, so just pretend for now it is fresh. Okay, just pretend it is fresh. So you have a weekly reject weekly, and then when you go to the daily breakout happened here. Okay, daily breakout happened here. Now here you have the weekly storyline officially bullish. Weekly storyline officially bullish. Okay, so and after it turns bullish, you're gonna look for the daily to turn bullish as well. So here, what do you have on this candlestick? So you're gonna have a daily reject daily from this. Okay, daily reject daily, and when you go to the H4, you're gonna wait for the H4 breakout. No, here you have the H4 external breakout. I'm not really sure if the daily touched in there, but there is another level that we touched right above it, doesn't matter. So as long as you understand this, daily H4 breakout. So daily turned bullish, weekly turned bullish the same day. Look at that, breakout, boom. Price doesn't pull back at all. So any entry you get is gonna go very aggressive. So the first entry I see is right here, and boom, it goes straight to 600 pips in just 2 days. Okay, let's say you just hold it for one day. That is 356 pips. So when they both align with each other after being the opposite, let's say because the weekly was bearish until we have the daily breakout, then daily turned bullish as well. Boom, the first entry is gonna fly. Okay, so let me just read the chat. Any questions, guys? No. This is not the kind of move that occur every 3 months. No, this move occurs more often. Fresh on daily, I believe. So no, not fresh on the daily. The weekly CC, it is fresh in another way. I'm gonna be explaining that just in a bit after we cover the momentum. So after this, we're gonna talk about the breakout was too far, but when you have a weekly reject weekly, daily breakout, you're not gonna go to the H4. It's not the same thing. So when you have a daily reject daily, H4 is way too far, you're gonna go to the H1, New York or whatever. And when you have the weekly reject weekly, daily is too far, you're gonna wait for the daily. You're not gonna go for the H4. Okay, you're gonna have to wait. So you just have to wait when they're both aligned with each other, and you're gonna hold all your trades for a very big move. Okay, Besides that, TP very quick. Next daily, next 100 pips, 200 pips. Okay, so for now, we're going to talk about the momentum. What is the momentum? The momentum is going to expand or basically make you understand how does the higher time frame levels work more. And at the same time, I'm going to be explaining an entry type. It's more of an entry type, but it is quite medium risk, okay? So this medium risk entry, I don't suggest you use it on prop firms, but you can, okay, obviously you can. But the win rate of this is around 50 to 60%, but you're going to have high RR with it, or like minimum of 3 RR up to 5 RR, okay? So 50% with that is actually good, but I don't use it on prop firms. Even if the monthly, week are aligned, we always go for daily H4 breakout. Yes, you always focus on the daily H4 breakout because it is the most important storyline, and then you look if it is aligned with the weekly storyline or not. For the targets, you refine daily to monthly and then daily to weekly and find your targets. And yeah, now I'm going to be explaining the momentum. The momentum is basically how price moves. If it's choppy, if it is fast, if it is whatever, approaching a higher time frame level. Now, the higher time frame levels that we're going to be working with is not just one time frame. It's a combo. The first combo is daily, monthly, my favorites. Okay, you're going to use the momentum on the daily, the monthly, and you're going to use it on the daily and the weekly, and you're going to be using it on the daily, aligning with the weekly, aligning with a monthly. Besides that, you're not going to be using the momentum at all. If you find a weekly fresh level alone, don't do it. If you find a monthly fresh level alone, don't use it. Sorry, as well for the daily, okay? So if you find a fresh daily alone, do not use it as well. So how does the momentum work? The momentum, you're going to go to the time frame of M15, okay? M15, you're going to look at the last 20 hours, how price behaved on M15 approaching this higher time frame level. If the approach is like from a very long distance, now when it is from a long distance, it doesn't matter if it's last 20 hours or whatever. Look, if price is approaching this level on a very sharp way, or if it's choppy, okay? If it is chopping around them fast, chopping fast, okay, it doesn't matter. This is good. This is what we want to see. If you have a choppy momentum, that means price has 80%, this key level has 80% chance, okay, of giving you at least a 40 pips reaction. So you're going to have something like this. Buy, and then your stop loss is at 20 pips for this certain entry type. Okay, you're going to put 20 pips stop loss and a TP of 60 pips at least, or 100 pips. Now I'm going to explain when you put 60 pips or 100 pips in a second. So if it is going very fast, it's 99% chance that it's going to go more than 20 pips. I'm not saying it's going to go for way too far or break it totally, but 99% chance you're going to hit stop loss on that buy. So if you pick a random daily, monthly, and then just sell on it and the momentum is like this, you're going to lose it. Okay, 99% you're going to lose it. So when you have a daily, weekly, monthly with a choppy, also this daily, monthly with a choppy price action on M15 approaching it, you can have 20 pips buy, okay, and 20 pips SL buy, and targeting 60 pips or 100 pips. Now, when do you target 60 pips or 100 pips? If price leaves fast, okay, if price leaves fast from your daily, weekly, if let's say in the next 10 minutes, price is already 30 pips away, then TP at 100 pips. But if price takes too long to leave the level, then just TP at 60 pips, okay? That is when do you TP at 60 pips or 100 pips. So 20 SL, 60 pips TP is 3R, okay? Sorry for my bad drawings. Okay, so here you're gonna have 3R at least, or if you have 100 pips TP, you're gonna have 5R. Okay, let's take some examples here. All right, so let's say you have right here, let's say this weekly. Let's see if it's aligned with the daily. So here, daily A level aligned with the weekly A level. Doesn't matter the combo, just daily, weekly. So here, daily, weekly, fresh. Now we go to the M15. I don't think I can go this much back on M15, so I'm just gonna go on M30. So here we have M30. Just imagine how M15 looked in this scenario here. So look at that. Do you see how price is approaching this daily, weekly? Is it even chopping? No, it's just going up and up and up and up and up. Okay, for how long? For the last 16 hours. The last 16 hours, prices have been going up so fucking fast, as you can see right here. Just so fast. Okay, so this will hit your SL. Let's say you just sell right here. That is 55 pips before it going down. Now you're not going to be using that. So you're not going to be entering that level. Let's pick one of the recent levels in here. So let's go to the daily and look at, I remember this one. Okay. Weekly, aligning with a daily, right? Weekly with the daily, and it's fresh, as you can see right here. Now let's check the M15 momentum for the last 20 hours on this level. As you can see right here, look how price approach this level. So from here, last 20 hours, the price has been chopping around. It didn't go that fast, just like we've seen in the previous example. Price up, down, then down, up, consolidating right here. This is what I like to see. If I didn't have this and just continued going down, I wouldn't be buying right here. Price went down and then you hit your buy. So you're going to be buying it here with a 20 pip stop loss. Not really sure if that hit. Okay, that did not hit your stop loss. So price, as you can see here, took way too long before it went up. So your TP is just going to be at 60 pips. And exactly at 60 pips before it went back to break even. Your break even, you're going to be putting your break even at 30 pips. So price after 30 pips, you're going to put your break even. Okay, so let's take another example. I still remember I had a break even one right here. Not really sure where it is. I'm just try to remember. I think this one. Are you sure? So I had a weekly plus daily and 15 right here. Yeah, this is the example. So on the M15, as you can see right here, price is chopping around, up, down, consolidating. It goes down, then a little bit of consolidation right here, and then touches. Okay, this is, do not look at this, okay? This is a sharp move, but look at the last 20 hours. So you're going to be looking at this whole period of time. So as you can see here, chopping. It has not been going so fast. Now here, you're going to be putting your buy with 20 pips stop loss, which got hit eventually. But here we had our 30 pips. And after that, I put my break even and it left so fast. My target was at 100 pips because it left so fast. But then price just eventually came back to my break even. Now, as the momentum clear, any questions about this basically certain entry type? It's not really an entry type for me, but yeah. If it goes straight to it, you're not going to be buying or selling at it. That's it. So if you have something like this, weekly, daily, for the last 20 hours, prices like this, you're just not going to buy. That's it. Okay, just don't buy. Now let's take an example at the last sells I took. If you see my Instagram, I had the sell right here, daily, lining with the weekly. Sorry, it was this one. Daily with the weekly. Yeah, weekly right here, daily right here. M15. Look at how price was chopping. Look at that. That's beauty. That's what I wanted to see. Okay, cool. Yeah. This session is going to end, so I'm gonna send you a new link, okay? Because I don't really have the premium Zoom. I'm broke, guys. Okay, I'm gonna send you a link in a bit, just a second. Okay, welcome back, everyone. So, yeah, Devon will never forget that. The guy wants to leak my videos, innit? I know you want to do that. Okay, everyone is here. Okay, let's wait for 3 more. So Before we proceed and go ahead and talk about the CC and what's a CC candle, before we do that, please, if you have questions about the momentum, want me to explain anything again, feel free to ask me in the chat. It is recorded, Luke, don't worry. Amazing. So what is a CC candle? And why did I say that this weekly is basically usable again? So daily reject monthly, daily reject weekly, and daily reject. No. That's not what I meant, Joshua. I meant that the daily is aligning with the monthly level at the same area. This is what I meant, okay? Don't confuse yourself. So you see this is a weekly V, right? Weekly V level. Joshua, focus with me, okay? So this is a weekly V level. Boom, right? At the same area, you're gonna find another daily fresh level in here. See that? This is a daily weekly combo. I didn't mean daily rejecting a weekly. This is the daily weekly combo, and then you're gonna use the momentum on it. Now you get it, bro? So you have a daily weekly combo. You have a daily monthly combo. Let's say you take this monthly level, and then you go to the daily. On the daily, it is a gap that is unfresh, so this is not a good combo. But this is what I mean. It's basically looking at this at another time frame at the same line, finding a fresh level in there. So yeah, hope that clears it up for you. Momentum is clear. It's just that we need to make sure analysis of the momentum is there. Yeah. So don't confuse yourself with the momentum analysis. It's not really accurate. You're gonna see the big difference in the last 20 hours. So if it's just like this, just don't buy or sell. When it's fresh, chopping around, even if it goes fast later on, if you see something like this, just buy. Okay. But the best example is when you have it all choppy. Okay. The normal example when you have fast, choppy, fast, choppy, fast. Okay, then you just buy. But the big no is basically when you have it all going down. Okay, maybe just leaving the go. No, this is a no. Okay, so yeah. Okay, so why did I say this is usable again? So here you're gonna have something called CC. What does CC refer to? Okay, what's the definition of this? It's called the confirmation candle. What is a confirmation candle? A confirmation candle, okay? I'm not supposed to explain this until the basically the entry session, but since I gave you this example, you're gonna be using it only on the weekly, okay? This is only on the weekly for storyline and only on the H1 for entries. Weekly for storyline, H1 for entries. For entries session, I'm gonna show you how to use it. So for the weekly, you're gonna have a VA or gap level, it doesn't matter. You're not gonna use it on the SBR and RBS and the QMs, okay? Just AV, normal AV and the gap. So preferably AV. So say you have a V level right here. A confirmation candle, the point of this is to make the level, basically confirm that the level is legit, okay? Confirming the level is legit. How is that? The first thing you need is a rejection. Rejection and only 1 week on the level. If you see 2 weeks on the level, it's not valid anymore. You need only 1 week. But that 1 week, it doesn't matter where, okay? It doesn't matter if it's right after the second candle. It doesn't matter if it's here. It doesn't matter if it's at the fourth candle, fifth candle. It doesn't matter, okay? So you just need the rejection. And that rejection needs to have a candlestick that closes, basically a body that closes at the same. So if the level is bullish, so in this example, as you can see, the V, a V is below the current price action. We want to buy from it, so it is a bullish level. If you have a bullish level, you need to see a bullish closing rejection. So rejection with a blue candlestick. So here, the price down, up, then down, then up, down. Okay, so you need a bullish rejection. So bullish candlestick with a rejection. This is a confirmation candle. The third thing is a sharp reaction. So if you see a wick with basically that goes in big drawdown or something like this, it does not count. It has to be basically 10 pips max in reaction. 10 to 15 pips max, okay? Something like this, the less the better. And you can use this for future, basically, storyline, okay? So when price is gonna come back again, you can look for another rejection. And that rejection doesn't matter if it's a bullish or bearish candle. Let's say you have something like this, and price rejects it. But with one condition, the condition is that the rejection needs to be sharp as well. You're not going to look for a rejection that is something like this. You have to use something like that. You need a rejection like this, a very sharp rejection. So in this case, you had what? A V level that is bullish. You have a candlestick that rejected it, that ended up closing bullish alongside with a sharp reaction, as you can see right here. So in the future, you can use this level again. So you have a weekly reject weekly again with a sharp reaction. Look how sharp it is. So that is 9.8 pips. Okay, so this is very perfect. Also, it has a daily level inside. Now, is the CC candle clear, or should I give you more examples to this? No. For momentum, you don't use the H4 at all. For momentum entry, you use daily, weekly, and monthly only. So daily, weekly combo, daily, monthly combo, and all of them, daily, weekly, and monthly. More examples. Okay, I'm going to give you another example in here. So, okay, this is a CC. Look at that. This is a CC, but it has a big drawdown on the weekly, okay? On the H1, it's different rules for the CC. It can give you drawdown, it can give you whatever. But in this case, look at that. That is 63 pips in drawdown. So you're not going to use that. As you can see here, boom, price just broke it. Okay, but let's say this one. Let's pretend this wick hit. Okay, let's pretend this wick hit. This is a valid CC, and if price comes back again and gives you another rejection, you can look for a weekly reject weekly and a daily breakout. 10 to 15 pips is fine. So it's better at 10 pips max, but 10, 15 pips is max. More than 15 pips, don't use. Okay, for momentum, examples for momentum. Okay, let's look for examples for momentum. I'm not really sure when was the last one, so let me just, I'm bad at finding examples here. Just give me a second. Okay, see, this is a weekly aligning with a daily right here. So as you can see, this daily is not fresh, but it has CC, so you're not going to use the CC on the daily. But let's pretend for this example that it is fresh. Okay, let's pretend this week does not exist. You're going to go here, looking at your M15. Okay. Yes, so CC candle is an exception where we can use an unfresh level. So you go here and look at how M15 approaches this. I wouldn't enter here because there is a very big up move in here. I would be quite hesitating between that. But when you look at the last 20 hours, we have a big consolidation in here. So it is fine. Okay, so consolidation, up move, entry. Okay, only if the daily is fresh. But in this case, the daily is not fresh. I hope that clears it up for you, momentum. Any other questions, guys? Okay. If you guys have any more questions, please feel free to give me some, because this is all what we're going to go through today. If you don't have any more questions, I can proceed with giving you the next homework. No more questions. Great. So before I give you the homework, I want to give you a quick tip on how to identify the current storyline on the first thing you do when you log to TradingView. Okay, is you go to the daily, instantly daily storyline. Okay, put this on your trading plan or whatever. So what I personally do is I go instantly to the daily chart. Right when I go to the daily chart, I start looking at the last candlestick. So the last daily candlestick, I'm gonna mark the wicks of that candlestick. So I'm gonna mark the bottom wicks, draw it to the left, the top wick, and draw it to the left as well. And in this box, I'm going to look if we rejected or we are about to reject any fresh levels. So on the bottom wick, we basically are about in 2 hours about to reject this gap, right? So we have a gap that we're about to reject in 2 hours, okay? And on the top, what do we have? We have an A level that we're about to reject in 2 hours as well. So you're gonna have this A level and this gap as well. So after 2 hours, after you have the rejection, you go to the H4 and look for your breakouts. Now, once you go to the H4, you can see here that this is basically quite not really good looking. So what you're gonna do, you can't know if this is external or internal breakout. So what you're gonna do is you go to the daily and put a vertical line. So you see this is the daily candle. When you're confused on the price action of the H4, so just put the vertical line here to split the day before and the day after, because that H4 and the touch can be from the previous day. So you just go here, go to the H4. Now here we started the new day. Okay, so we touched the level on this candle. We did not touch it in here. You see the difference? So why didn't we touch it here is simply this is the price action from the previous daily candle. This is part of the level. Check this out. Look at this arrow. You see where we touched it? We touched it on this candle, part of the level. So it does not count. Okay. You just go to the left until you find the level. You're not going to go to the last year or whatever. Just go to the recent price action. So here you go to the H4. And this is where we touch the level. So the last A level before the touch in here is this A level right here. Boom, A level. So did we break this A level? Yes, we did. Now from the top, you have another daily reject daily. Now this is where the example where most of my students ask me a question, bro, when I have a daily reject daily from both sides and H4 breakout from both sides, which one do I follow? So you have a daily reject daily and you have an H4 breakout from the bottom and you have a daily an H4 breakout from the top. So what do you do in this case? You basically simply follow the last storyline. So the last breakout is this one. So you're just bearish instead of bullish. So you're just going to be focusing on sells and not buys. But when you don't have a breakout, that means you're still bullish and you're going to focus on the bottom rejection. This is your bullish breakout. In this case, you don't have a bearish breakout because the daily above, daily reject daily, the external breakout here is here. So you don't have the external breakout. Now, since we are bullish on the daily, where is my possible next target? My possible next target is next fresh daily. But in this scenario, you don't have a next fresh daily. Look, this is unfresh, 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 unfresh. Does that mean that we're going to make an all-time high? Possibly. But what if price makes a new level here, which happened just in here? Let me just show you this example. So price here was reaching for the next daily. Storyline was bullish. So the next level was no around here. So as you can see, you have a wick, you don't have levels. Price is going up. Where's the next target? The next target is not nowhere around here. So price made a level itself and then rejected it and gave you an H4 breakout. So that is the only way that price can flip bearish now. Okay, you're not gonna find any level to the left. So this is the only way that price is gonna flip bearish. So maybe you're gonna have something like this, a daily bearish candle. You're gonna have an A level, and we might reject it. And after that rejection, you have an H4 breakout, and then we can start going down. Besides that, you're gonna be only looking for buys. Okay, only looking for buys. I'm looking for buys in the bottom area right here. So yeah, do you guys have any questions? Okay, forgot to mention here that we don't have any daily levels, but keep in mind we have a weekly fresh. Okay, we have a weekly fresh. Questions, guys? You mean is there a way to spot if fresh levels are made halfway? The CC is applied to weekly for story and H1 for entries. You're not going to use it on the daily or H4 or monthly, no. I'm not sure what you mean by your question, Anup or Warner. The breakouts, I explained that. You can watch it in the recordings again. So I explained the difference between the external and internal breakout. The external, okay, simply look at this. Price is going to make higher highs and higher lows after we break this. This is a breakout, okay? So you need something like this, breaking the last low that formed the high before we touch the daily, okay? But it needs to be before we touched it. So see this daily, we touched it right here. The break needs to happen. The V level that needs to get broken should be made before the touch. Okay, is that clear? It's very simple. Just watch the recording later. Amazing. So I'm gonna give you the next homework. Your next homework is basically the same as the last homework, but with marking the breakouts and the targets in where price flip. Now, you're not going to be looking at the major swing points on the daily only. You're going to be looking at the mini ones as well. You're going to be looking at where price reacted from here. Why did it go up from here? Right here, right here, right here. All the places where price gave you a daily reject daily and a bullish storyline and then bearish storyline flipped again, daily reject daily alongside with the H4 breakout. Now, as you can see here in this example, price did not react from any level on the left, but what it did is it made a level itself and then rejected it, and we did the H4 bullish breakout. So here, where did price go back up from? This level. Okay, where did it go down from? It didn't find a level on the left, but it reacted from this one itself. Okay, up again from where? From here, down again from here, down from here. You're just going to be looking at the mini basically levels inside the price action, even in the consolidations. I want you to find where all these moves happened. So you're going to be marking the daily reject daily and the H for external breakout. So external breakout, one screenshot for the daily reject dailies and one or two screenshots for the H4 external breakouts. So if it sounds quite confusing for you, just watch the recording and I'll be answering any questions you have, guys. Okay, don't hesitate to ask me any question, even if you think it's stupid or dumb. Okay, about marking daily wicks, do we mark percent daily candle or previous? Didn't understand that question. Try to refine it more. So, okay. Price making a level right here. Okay, let me just try to explain that. So most of the time, price is gonna find a level on the left. Look, it's going here. Find it on the left, react to it. But what if you don't have a level on the left? What do you do in this case? You're gonna wait for price to create a level and then react from it. Okay, that's it. Very simple. Yes, the same date range on the chart as last homework. Yeah. If it didn't find any levels on the left is what I mean in my last question. Yeah, that's what I meant. So you can do that again. CC, you don't really need a homework, but just mark 10 CC levels, okay? 10 levels CCs on any time frame. It doesn't matter, just simply like this one. Okay, this is CC. But if you have something with more than 2 weeks, as you can see right here, this is a rejection and it ended up bearish, so it's not a CC. This could be a CC if we didn't have this wick, but in this case you have 2 weeks, so this is not a CC. So you just have to understand that it is 1 week and the rejection on the same direction of that level. So if this is a bearish level, you need a bearish closing, okay? Hope that clears it up for you for the CC. If you have any more questions, feel free to tag me in the group anytime alongside with the screenshots of the homework. Any more questions, guys? Yeah. There is a maximum wick length requirement for the CC candle, which is 10 to 15 pips. Okay, preferably 10 pips and 15 pips for the weekly. Okay, for the weekly. But in this homework, just mark any. Okay, you can mark this one. Sorry, this is not a CC yet. It needs to close bearish. Let's say this one, it went up by 12 pips. Let's say 20 pips. It's fine. Okay, just for the homework. Please don't send me the homeworks on my DMs because it's gonna be floating a lot. So just tag me in the group. I will read all your messages there. Okay, amazing. I hope you guys enjoyed today's session. I hope it's not overwhelming. If I see any big confusions, we can repeat the knowledge or the session in a different way. Maybe take it easy on you guys. But if I see you doing well and doing good in the homework, yeah, we're just gonna proceed. Our next session is on Saturday. Yes, correct. I have the third session with the other group tomorrow, and ours is gonna be on Saturday. I'll catch you up, guys, on Saturday. So it's just 2 days between today and Saturday. Yeah. Thank you for today. and I'll catch you guys next time. Bye bye.